Direk Podcast Politics of Everyday Life เพราะการเมืองอยู่กับเราทุกที่ทุกเวลา
Welcome everyone to the Direk Podcast in Ep.72, the podcast from Direk Research Center, Faculty of Political Science, ธรรมศาสตร์ University.
This Direk Podcast episode, we will discuss with Mr.Richard Yarrow, Research Fellow, Faculty of Political Science, ธรรมศาสตร์ University. So, you're with me, ชลทิศ ศรีไกรขจรกุล
I'm Pran Punawat. We are third-year students from BIR Program, and today we are going to talk about the research from Mr. Richard on the topic of China economic stagnation and impacts on the Thai economy. Let's get started.
Your research has been focusing on the Chinese economy. You have also been conducting fieldwork in China recently. Can you tell us a little bit about the overall picture of the Chinese economy after the end of COVID-19 pandemic? Apart from the rumor about the real estate problem, has the Chinese economy been sluggish in other sectors as well?
Chinese economy, of course, for the last several years has been the number 2 economy in the world in terms of international currency-based GDP. Some people claim that the Chinese economy is number 1 if you measure in purchasing power parity measures. So this is a large country. It's very significant. Its economic future is very significant for the whole world. First, I'll say there are a number of areas or sectors that are doing quite well in China today. So if you look at what Chinese authorities now call new productive forces of the economy, so this kind of advanced tech sectors, artificial intelligence, semiconductors, integrated circuits, electric vehicles, batteries, renewable energy equipment and supplies, and then everything along their supply chains. Those sectors are doing quite well. They've been booming. The industries, the manufacturing, the sales, both domestically and externally, have grown tremendously in the last 5 years. Next, on the list of what's doing well, I'd say infrastructure has grown tremendously. A lot of particularly Western critics or Western analysts have criticized China for having ghost cities, which is not completely unfair. It's partly true. But there's been a huge increase in infrastructure investment all across China, which, leaving aside some of the market rationales for it, they really do genuinely improve people's quality of life. They make it easier to commute, they make it easier to live even in lower tier cities and third tier cities, in rural areas. They create beauty, they create public entertainment. So that's been a good change, and that's been a significant change in the last couple years. Then getting to what's doing badly. If you look at retail, wholesale, anything oriented to the consumer economy, both goods and services, some enterprises have been doing well, but by and large, most have faced very weak revenues, very weak consumer markets. And there are a few places where it's doing a little better, but overall that's pretty consistent all across the country, as far as I can tell. Certain types of manufacturing sectors have faced difficulty. So if you think of manufacturing that's oriented to the domestic consumer market in China, maybe that's furniture manufacturers, some kind of clothing manufacturers, some kind of luxury good producers, like luxury jewelry, that has not been doing super well. And manufacturers oriented toward what we might call more sensitive kinds of technology that might be subject to de-risking campaigns or multinational firms, industrial diversification strategies. Those sectors have not been doing very well within China as industries have relocated. When I talk about the Chinese economy, and I'm sorry I'm going on for a while on this, but it's an important category. When I talk about the struggles that the Chinese economy has been facing in recent years and since COVID, I typically focus on 4 areas or 4 causal mechanisms or for trends. And I'll go through them in order of least important to most important. So least important, I would say, would be geopolitics, actually. And you might think this is counterintuitive because this is what we see in the news a lot. This is easy to talk about, and we in a political science faculty, of course, like talking about the geopolitics. And what I mean by geopolitics is kind of, as I mentioned, the risk diversification strategies of different multinational businesses as well as Chinese businesses moving industries overseas. We can see hard evidence for this in a couple areas. So I've been looking at smartphone production around Henan province. A lot of us use Apple devices, Apple products, whether it's computers or iPhones. A lot of the iPhones Apple produces used to be made in Henan, in an industrial zone just outside the provincial capital of Zhengzhou. Since 2022, exports of smartphones from this region of Henan province have been in pretty stark decline. So not since 2018, but really since midway through COVID. We can see it looks like production is down somewhere between 30 to 50%. That's significant. But why do I rank this as number 4, bottom? Overall, for the economy, we don't see much of an impact for most industries. And Chinese exports overall are up. They're still strong. Number 3, the third most important, would be business confidence. So that's also talked about a lot as far as concerns, especially within China, about the economy's performance. But business confidence in China's case is really worst for the large enterprises, large private enterprises, the ones most subject to government policy, nationwide policy, like you have the Alibaba, Tencent, Huawei, some of the education firms like New Oriental. They have difficult business confidence, but they also represent a very small share of the economy, as is true in any large country. SMEs, small and medium enterprises, are the backbone of pretty much any large country's economy. So this is not the biggest reason in my view. Second most important is the real estate sector. We can talk a lot more about the real estate sector if you want. Real estate prices in lots and lots of cities across the country outside of Beijing and Shanghai have been in steep decline since 2019. We're talking about declines potentially between 10 and 25% so far, depending on the city, depending on the neighborhood. We're also seeing rental prices decline significantly, and if rental markets do worse, it's harder to justify higher asset prices because you can't make a return, you can't make a yield from the housing that you own. And this is really China's worst long-term problem. Like over the next 10 years, this will be very difficult for the Chinese economy because so many people own property, and if everyone sees their wealth disappearing because their property is becoming worth less and less, then people won't want to spend as much as they once wanted to spend. If you think today you have 10 million baht, and tomorrow you wake up and you discover, oh gee, I only have 1 million baht, or maybe I only have a couple tens of thousands baht, your spending patterns will be very different. Even if your income stays completely the same. Just psychologically, you will spend very, very differently. You will behave and plan very, very differently. If one day you think you have 10 million baht, and the next day you wake up and you only have 100,000 baht. And that's called the negative wealth effect. The number one reason, which is really very much grounded and makes perfect sense for common sense, is lingering effects of COVID. The Chinese economy faced a lot of shutdowns from COVID in 2020, tiny bit in 2021, more so in 2022, some dislocation related to COVID at the beginning of 2023 as the economy, as the society was reopening. But if you think of what does a lockdown mean in China's case, it meant people have to stay indoors, they can't work, They can't go out and spend as they normally would. And if people can't work, they're not making an income. If people can't spend, then small businesses, small retail establishments, small services are not making revenues, so they can't pay their workers. And the whole economy grounds to a halt. Well, in the US case, and also in the case in Thailand under Prayut, when there were COVID dislocations, which were not as bad, not as substantial of a lockdown as what China experienced, but when there were COVID dislocations, the government provided consumer-oriented stimulus. The government gave cash handouts. They gave you an app and they said, we'll send baht to you on the app. Same in the US. The US arguably overdid it, but they absolutely gave out lots and lots of money to consumers. In China, that largely did not happen. A few cities experimented with very small consumption voucher programs. Tianjin had this program, I think Shenzhen had this program. But by and large, not on the scale of the US, of Japan, of Thailand, of a lot of more developed economies. When you have people who can't work, they can't spend, they get no support from the government, what do? They spend down their savings. And now China's woken up in 2023, 2024. People can go out and spend. People can go out and behave as they once did. But if you've been losing money for the last 5 years, if you've been seeing your savings steadily depleted over the last 5 years, and if a lot of businesses have closed during the COVID period because they couldn't support their employees, they didn't have revenues, and therefore employment is a lot worse for a lot of these businesses, then it's hard to revive the economy. It's hard to revive consumer spending. You can't fundamentally have consumer spending if consumers don't have money. So that's the number one issue, I would say, that's facing China right now. Shorter term, but number one. Well, I think there was a period for a couple months in 2023 where there was a lot of optimism that China would bounce back, because many businesses and many ordinary people, probably some government officials, saw the US economy tank during 2020, and then it quickly bounced back. It quickly jumped back up. And most countries had a similar experience. COVID represented this very sudden shock. Output declined. In Thailand, it declined 6 or 7%. But then Thailand also jumped up. There was some recovery. And I think most Chinese were very optimistic that they too will have this quick V-shaped recovery in the line. Go down and then jump, like other countries. And to a little extent that happened, in that businesses can operate basically normally again. But China didn't figure out the consumer balance sheet, the household balance sheet side of the equation. Because in Thailand, in the US, and a lot of countries, there was some government support to make consumers whole, make consumers vibrant. Not perfect, but give some support when people can't work. And in China, that largely did not happen. Meanwhile, you have all the other phenomena. You have issues 2 through 4 that I mentioned. All of those are weighing down on the Chinese economy too. So overall, it's a very weak recovery.
There's a common understanding among political scientists that if a non-democratic country has been experiencing domestic problems, it leads them to externalize conflicts to divert their people's attention. If the Chinese economy has truly been facing a downturn, how would that affect the direction of Chinese foreign policy? Would China become more combative and aggressive? Is this the reason why Xi Jinping talked about reunification earlier this year?
Right. Well, it's possible. It's hard to predict what's in the minds of leading politicians. Certainly, every politician wants to have achievements that they can present before their constituents, before their public, and to history books. But I would add the scenario where politicians, the idea or the theory that politicians look to externalize domestic issues. They maybe spark a war in order to distract their domestic population, right? That seems to me to be a theory largely grounded on European history, or largely grounded on European experiences. And it's a little harder to find that within Asian history and the Asian experience. Even within the European experience, it relies on a somewhat narrow reading of history. So if you look at World War I, the origins of World War I, they've been debated for a century now. They've been debated endlessly. One could say maybe World War I started because the Socialist Party, the Social Democratic Party of Germany, as well as the Communist movement in Germany, they were rising within domestic vote shares. The established government was anxious and they needed a distraction, and they got one with the war. Yeah. But one could also look at a lot of other explanations for World War I beyond that one. If one looks at Asian history over the last century or beyond, Thailand, for instance, has had so many domestic crises over the last 100 years. Thailand has had so many coups just in the last 20 years. And the Thai economy in the last 20 years has not been great. How many wars has Thailand started in the last century? Within Southeast Asia, it's a great power. It's a significant power. It's possible. I mean, it's hard to predict. It's hard to make predictions. I think they might be related, but countries can be assertive if they have an economic power and they have an industrial power that backs up their assertion. It's very hard to be assertive if you have no money. It's very hard to be assertive if everyone can tell that you're declining, and if you cannot purchase or develop the most cutting-edge military goods, you cannot purchase or develop the most cutting-edge technologies, both for civilian and government and military sectors. In the long run, it's hard to be assertive if you're not doing very well. It's possible. It depends on the psychology of leaders, and that's tricky for economists, people focused on economies, to answer to.
China has been a source of global supply for years. How would the economic slowdown affect the global supply chains, especially in Southeast Asia?
Well, Chinese trade with Southeast Asia has been very large for the last 10, 15 years or so, and it's grown since the pandemic as well. How will it affect Southeast Asian economies? One can look at that question from the trade side, the imports and exports side, and one can look at it from the financial side, the investment flows side. So let's start with the trade side. On the trade perspective, if Chinese consumers do not have much money to consume, then they will not be buying as many products, and that will include buying products from Southeast Asia. Consumers everywhere are net importers. Consumers, households buy goods, and some proportion of those goods come from overseas. If households are not spending money, then they're buying less of any kind of good, and that will include the goods coming from overseas. And it shouldn't just focus on goods. Since we're in Thailand, we should also talk about tourism. Households will not be spending as much on tourism overall if they don't have much money to spend. There are caveats to that, which I can come back to for Thailand. On the export side, Chinese producers still need some place to sell their goods. Otherwise, they take steep losses on their goods if you don't sell anything as a business. So if you don't sell to your domestic market, where do you go? The dream scenario for Chinese manufacturers is to export to the places that have the most money. And that's the United States, the European Union, Japan, maybe Oceania, Australia, maybe Singapore, maybe a few other places. But a lot of these economies are currently trying to limit the number of Chinese goods entering their economies. So we all know about Donald Trump's trade war that he started. Well, now it's not just Donald Trump that's starting a trade war, it's also European Union is looking into anti-dumping measures on the Chinese manufacturers. Japan is looking into similar policies. Indonesia instituted 200% tariffs recently. Malaysia as well instituted some tariffs. So if Chinese products can't go to the places that have the most money, like the United States. Where do they go? The next bet might be the places close by and that have the next largest consumer markets, and that could be Southeast Asia. So if Chinese products are coming in, and they're coming in at relatively low prices, what will happen to domestic Southeast Asian manufacturers? I saw reports a couple months ago about, Lana, Lampang, are famous for ceramics factories. Well, now a lot of those ceramics factories are shutting down. And the Lana style, the Thai style, like with the rooster ceramics, a lot of those ceramics are now being made in China for lower prices and imported into Thailand. So Thailand is not making the Thai style ceramics as much as it did before. So that's the risk on the trade side. Let me talk a little on the investment side. If you're a business or you're an investor, you want to make the highest return you can from the money you have. If you see the rate of return or the yields decreasing in one category of investment, at some point you'll think, gee, I should move my money over to some place where it's making more. It could make more, could make a higher yield. Right now, as the Chinese economy slows, or the Chinese economy in some sectors faces outright recession, investors who have been committed to those sectors will think, well, where can I find higher yields or higher returns? That means a lot of money that's been committed to China, within China, both by Chinese investors and by multinational investors, is going to start thinking, well, where can we go for alternatives? That might include the United States, it might include Japan, but a lot of it probably will include Southeast Asia. And that creates a question for Southeast Asia of, if there's so much money coming in, what are we going to do with it? Can we use it productively?
As our follow-up questions, how does the Chinese economy slowdown affect Thailand?
Well, I mentioned the lana, the ceramics, right. Well, and that's true for a lot of other sectors. So Thailand traditionally was a major hub of auto manufacturing and vehicle manufacturing across Southeast Asia. Now one sees a number of factories shutting down. The BYD, Chinese electric vehicle factory, might be coming into Thailand. Maybe they've already been. Well, I mean, building a factory, not just selling the goods. But the flip side is, for decades, Thailand hosted a number of internal combustion engine factories. And those are starting to see either weakening output, weakening demand, or they're announcing outright closures. So Suzuki and you might remember better, there are a number of other Japanese and Korean automakers that have announced plans to shut down factories within Thailand. That's not going to be great for the Thai manufacturing sector. Tourism is another concern. Before COVID-19, Thailand peaked at having 1 million Chinese visitors per month. That was a monthly peak. Now we're up to, I think, around 400,000 or 500,000 in recent months as the peak, which is a lot better than during COVID, but it's still a lot worse than pre-COVID. And from what Thai authorities can tell so far, many of those 400,000 or 500,000 Chinese tourists are not spending like they once did. The spending is lower. So even if the Chinese consumer market is terrible, that doesn't necessarily mean bad times for Thai tourism, because you can imagine the scenario where Chinese households think, well, we once took vacations to Europe, but Europe's so far away, Europe's so expensive. We're going to cut that now, we'll go to Thailand instead. Thailand's easier to reach, no visas, cheaper, shorter flights. So that might help Thailand. But right now we're not seeing the same tourism numbers. That's a problem. Investment is a big question for Thailand. Will Thailand be able to effectively utilize incoming Chinese investment money? You look at Cambodia next door. Sihanoukville has hundreds, possibly thousands of buildings that were constructed with Chinese investment money, but a lot of those are vacant, or a lot of those haven't even been fully constructed now. That's not necessarily a disaster for the Cambodian economy, but it's not great. It doesn't look like a highly effective use of funds. If you look at the American example, we can talk about the benefits or disadvantages of Bitcoin as a technology a lot, but the pricing, the amount of money that's gone into Bitcoin or cryptocurrencies in recent years is extraordinary, and I think ludicrous. I would argue ludicrous. So I'd say the US has not effectively utilized incoming capital flows, incoming financial flows very well. So will Thailand do better? Maybe, I hope so. But it could go well, or it could be the useful investment scenario, or it could be the Sihanoukville scenario.
The local Thais, including second and third generation of Chinese descendants in Thailand, start complaining about how they find it difficult to compete against the Chinese capital in recent years. Is the Chinese capital a challenge or opportunity for this country?
Depends on how Thailand uses it. That's a big and serious question. We can see the Cambodia example on the one hand. We can see maybe Singapore is a good example on the other hand. Singapore has benefited tremendously from incoming financial flows, but the Singaporeans have thought of how to use it effectively. That includes building high quality housing, not just for the elites, but also for the masses, building high quality infrastructure across the country, building public spaces, gardens all across the country, investing in new kinds of industries, supporting the startup scene in Singapore, and also investing in education. I'm very proud, I'm wearing my Thammasat shirt today. I'm proud to be here and hosted by Thammasat. But I can say honestly and speak bluntly that Thai universities need more support. Thailand has an opportunity to rise up as a hub for secondary and higher education. But institutions can't do it with 20th century facilities and 20th century funding levels. Singapore has been very clever and very, very smart at supporting secondary and higher education. And they've done it very intensively for a very long time. So this is maybe the dream side for Thailand. The horror side for Thailand is investment money comes in and it's utilized for worthless projects or just for asset price appreciation. So the worthless projects could be, the real estate that nobody lives in, or that only a small number of elites or highly mobile international expats, but not Thais, only those people can use. It could be, you could have the bridges to nowhere scenario, the infrastructure that doesn't really benefit anyone, that isn't really utilized very well. You could have people buying businesses as assets, but not as functional investments, and that makes it harder for ordinary Thais to purchase homes in good places. So that's the horror side, and it's really a political question of how well will Thailand be able to utilize these.
How would you recommend the Thai government to cope with the Chinese government, given that Thailand starts to rely on China economically? Can you tell us experiences of other Southeast Asian countries?
Well, I'll say first, and maybe I'll be a little blunt as a foreigner or a foreign observer here, so I hope you'll forgive me on that. But I'll say, first, I think Thai officials should realize that the style or the practice of bamboo diplomacy, as it's been implemented in recent decades, is not working economically. The Institute for Southeast Asia Studies in Singapore recently released a very interesting report on Chinese outbound investment in Southeast Asia. And if you look through this report, you can see where does the largest share of Chinese investment go into Southeast Asia? Well, it goes into, maybe as you'd expect, Indonesia and Singapore. Indonesia, very large population, growing economy, growing industrial base. Singapore, it's small, but has a very deep financial sector. It can absorb lots of investments. After Indonesia and Singapore, somewhere in the middle, you have Vietnam, Malaysia, Cambodia, also kind of growing industrial sectors, some big Chinese infrastructure projects. You have Laos somewhere toward the middle. And then you look toward the bottom, and you have the Philippines and Thailand. Now, you compare Philippines and Thailand geopolitically. Philippines has naval battles with China every day. Naval battles with Chinese Coast Guard, Chinese fishing boats, whatever. Recently, I've been seeing reports that not only do you have water cannons between the two sides, but you have sailors taking axes and knives and they're going and hacking each other's ships. This is not a comfortable geopolitical environment. I'd be worried if I'm a security planner in either country. But the Philippines actually, in terms of investments, has ranked slightly higher than Thailand in terms of Chinese outbound investments into Southeast Asia. I think the Singapore report showed Philippines gets about 6%, Thailand gets about 5%. Thailand doesn't have these geopolitical naval battles. And we're still at the very bottom. In terms of numbers of big investment projects, like the multi-billion investment projects, Philippines ranks significantly higher. Thailand, very, very few. So is this working for Thailand? Maybe not. Maybe there needs to be some kind of rethink on the diplomacy, and also a rethink of how to build partnerships with a more diverse array of countries that include Thailand's traditional leading investment partners like Japan, but also new potential investment partners in South Asia, in the Middle East, in Europe, in different regions. So I'd say that is one, and then the second is how do you avoid the heaven or the hell or the dream or the horror scenario of what to do with Chinese trade and investment flows. The ideal for Thailand is you want to have stable and good relations with China. That's important for Thailand, it's important for China, it's important for the world. But if trade flows continue as they currently do, and if investment flows turn to kind of unproductive or bad sectors or bad categories, then you're going to end up in hell, or you're going to end up in a horror scenario, both economically and politically. You'll have a trade war and you'll have worsening relations, kind of whether you like it or not. Because that is, to some extent, what will happen automatically if Thai manufacturers are under sufficient stress and Thai small and medium enterprises are under sufficient stress. The dream scenario is how can Thailand sufficiently protect its manufacturing industries and help upgrade its manufacturing industries, and also accept and utilize Chinese investment flows efficiently in areas that can benefit both sides. So you preserve the relations with China, you make them stable, you avoid the trade war risk, and you have something good for the Thai economy as well. And that's a very difficult political question, but I'm optimistic Thailand will eventually reach it.
Thank you so much for today, Mr. Richard Yarrow, for the economic insight, especially for the Chinese and Thailand, along with the Southeast Asians. And I hope that we have a good talk again in the future.
Lastly, if you find our podcast beneficial, you can share this podcast to your close friends, family, or your colleagues. Oh, follow us so you won't miss any good content like this. For today, thank you for listening to our podcast, and goodbye.
ท่านสามารถรับฟังเนื้อหาดีๆจากศูนย์วิจัย Direk ชัยนามได้ทาง Direk Podcast ผ่านช่องทาง SoundCloud และ Spotify รวมทั้งยังสามารถติดตามความเคลื่อนไหวและสาระดีๆจากพวกเราได้ทาง Facebook Direk ชัยนาม Research Center